Join the rice revolution today.
No other rice that tastes like Nigerian rice. Are you sorry? That's the Nigerian rice we are talking about. Chocolate made in Nigerian rice. Healthy food. I'm going to bring Mrs. Mom to come to chocolate rice made in Nigeria here. And see how it are made.
Correct.
And how they are cook it.
Correct.
Homegrown rice are good for your health. It boosts our economy and give employment to our people.
This message is brought to you by the Federal Ministry of Information and Culture.
For years, the NTA has been promoting science, technology, arts and crafts under the tagged name National Children's Expo. We are set with another edition as we gather children around Nigeria. Junior category ages 6 to 12 and senior category ages 13 to 18. The theme for Expo 2018, achieving self-sufficiency in agriculture, meeting the challenges of security and exposition of alternative energy as pathways to national development. Date, October 21st to 25th, 2018. Venue, NTA Headquarters Arena, Area 11, Garki, Abuja. We are set to celebrate the best of innovation across the country. For more information, please call the following numbers. NTA ETV, promoting learning.
Dettol team is visiting schools to teach children how to protect themselves from diseases. Do you know how we get illnesses like diarrhea, cough, and cold? No! They are spread through germs which are everywhere. You collect germs that cause diseases. You pick up germs from any surface, like when you don't wash your hands after going to the toilet, while playing. And then you can get sick because of germs. That's why you need to fight germs to stay healthy by washing your hands and taking your bath with Dettol soap to protect from up to 100 illness-causing germs.
Wash, wash, wash your hands. What you have to do is bath yourself. Dettol soap every day. Wash, wash, wash your hands.
Thanks for staying with us. Now, to kickstart our discussion on managing Nigeria's political economy, let's take this background report put together by Mitaire Ikben.
The prevailing political events in the country is creating anxiety among investors across all strata of the economy. There is a lot of uncertainty about the political dynamics towards the 2019 general elections, and this is taking its toll on the political economy of the country. Perhaps the signs are more visible in the stock market, which recorded further decline recently following the gale of defections by politicians from one party to the other, as well as other political alignments and realignments in the polity. Again, with the invasion of the National Assembly, the all-share index and market capitalization at the Nigerian Stock Exchange continued on a downward slide for the 5th straight session last week. Stocks have also gone south this year by 5.2% after initially appreciating by 42% last year. The negative trend has prompted the Central Bank of Nigeria into a series of interventions, including the injection of $210 million into the interbank foreign exchange market to ensure availability of forex. Economic analysts indicate that serious investors are likely to hold back investments until the direction of governance is clear by 2019. And this cautious approach by investors, analysts say, may prolong a bearish market until political stability is in sight. What further sectors of the economy are likely to cave into political anxiety? And what measures are required to insulate the economy ahead of 2019? Guests on Good Morning Nigeria will provide their perspectives shortly.
Thank you very much, Mitaire Ikmen, for that background report. Now, here with us in the Abuja studios to discuss this topic in greater detail, would like to welcome Dr. Afolabi Olowokere. He's Head of Research at the Securities and Exchange Commission. Dr. Olowokere, pleasure to have you on Good Morning Nigeria.
Thanks for having me.
Also here with us, familiar face on Good Morning Nigeria, Professor Uche Uwaleke. He's Head of Banking and Finance, Nasarawa State University in Kefi. Professor Uwaleke, pleasure to have you with us.
Thanks for inviting me.
All right, gentlemen, we'll probably be joined later on once we have the all clear from our Lagos Network studios. We'll have two other guests who will be joining us from that center. But in the meantime, let's begin the conversation with the two guests we have with us in the studios. You'll listen to the background report and the various reports that we've been reviewing in our newspaper review segment. Plus, of course, you know, the stories that players in the capital market are telling every day with regard to what is happening on the capital market. But can we have an understanding of what is playing out at this time? Let's begin with Dr. Olokere.
Okay, thanks. One major background is that we all know that the capital market did about 42% last year. That means we came out of a very low level to a very high level that was quite substantial. And early in this year, we know we did about 12% even in the first 12 days, and everybody was saying this is one of the best performing capital market in the world. But we also understand that demand and supply determine a lot of things in the market, and the demand will definitely come from foreign as well as domestic. In terms of foreign, you want investors to come to your market because they also contribute to the demand, and the foreign exchange flow and the rest is quite beneficial to the economy. But in terms of domestic, you can have institutional domestic buyers as well as retail buyers. In the case of Nigeria, we know that quite a number of foreign investment determines a number of things in the market. In other words, a lot of people wait for what foreign investors will do before they will also move in. We have institutional investors that also come in, especially the pension fund and the insurance, but the retail part is still very low compared to in terms of transactions that come from that side. So for foreign investors, most time they are looking for direction. They are looking for foreign exchange risk, whether it's going to be beneficial or it's going to be harmful to them. But for what the central bank did in April last year, we know that that's one way or the other subsided. But when it comes to political risk, that's a major factor. Everybody wants to see what is going to happen to that economy in terms of the performances of the economy and the company. So quite a number of them pull out in the last few months, and that affected a lot of things. Of course, when foreigners pull out, some investors domestically may also want to hold on. So direction in terms of the economy matters for foreign investors. And because their activities also affect domestic investors, they also, one way or the other, you may have a lot of supply more than demand, and that can lead to decline in prices. And another thing, which is also in the area of political thing, is that when elections are close, politicians may also sell stocks, right? I mean, you sell assets when you need money for whatever you want to do. So, and if you have a lot of people who try to sell and very few people, especially when purchasing power is not very high, you may have things coming down a bit. In addition to that, there are a lot of sentimental issues that affect foreign investors in whatever they do. Everybody look at the macroeconomic conditions. They look at what happens to the performances of the company. So there are quite a number of factors that affect stock performance, just like everywhere in the world. And added to that, U.S. is raising rates. So there's something called home bias. If you are coming from the U.S. and the interest rate is higher in the U.S., you probably would prefer to stay at home than coming to an emerging market that may be more risky than where you are coming. So quite a number of factors are affecting, not a particular factor.
All right, Professor Waleki, let's hear your views on the current downward trend and what people are saying concerning the economy.
Yeah, thanks very much. 2018 is a penultimate election year. We've had the same experience before. This is not the first time. 2014 too was a penultimate election year. And in 2014 also took off on a very strong note, just as we also saw in 2018. 2018 also took off strongly. In fact, maintaining the momentum we saw in 2017. In 2017, the market, just as he said, gained 42%. As a matter of fact, Nigeria was the third best performing stock market in the world as of 2017. Then February, March, we began to see market corrections. We began to see profit taking, taking place. But what's happening now is beyond market correction because it has persisted. So you could now say that the market is in the bear territory, clearly in the bear territory. But that's not peculiar to Nigeria, actually. If you look at global stock markets, I'm now referring to publications of the World Federation of Exchanges, as well as the Morgan Stanley Capital International. These reports say that globally, well, developed markets, fared better the first half of the year. If you look at the U.S. markets, for example, whether it's NASDAQ, whether it's Dow Jones Industrial Average, you go to UK, for example, the FTSE 100, France CAC 40, Germany DAX, and Japan Nike 225. So in terms of performance, relatively they have, done better than the emerging markets. The story is not the same for emerging markets. The Morgan Stanley Capital International, has reported that emerging markets dropped 8%, for the first half of, 2018. And particularly hit were even those markets that recorded very high growth in 2017, notably Argentina. Argentina recorded 72% in 2017. It was actually the first in the world, followed by Turkey. Turkey recorded 43%, and Nigeria 42%, coming third. So Argentina has lost more than 20% in dollar terms. Turkey too has also lost a lot of money, and Nigeria market, of course, has also lost. Your report said 5%. As of Friday, actually, the market was actually down year-to-date return by minus over 7%. That is Nigeria. But again, if you look at that report too, it talks about the factors responsible. And Dr. Falobi, mentioned a very important factor, which is the normalization of interest rates in the U.S. Okay, it is coming faster than people, expected. So, the Federal Reserve in the U.S. is front-loading, that interest rate hike trajectory. So that is what they have done. And because of that, you now find it's triggering capital outflows out from emerging economies into the U.S. In two ways. One is that investors are going to U.S. in search of higher returns. And the other angle is that it's no longer cheaper for people to borrow in the U.S. and come and invest in a place, say, like Nigeria. Because at the end of the day, what matters is risk-adjusted return. Okay? That's why we often say that investors are taking flight to quality strategy, because you want a place that is safe. So they see the U.S. market as a safer market, compared to these other emerging markets. And what has exacerbated the situation in emerging economies, including frontier economies, Nigeria is a frontier economy, happen to be their local problems, local issues. In Turkey, for example, the lira has dropped, drastically, the currency. In Argentina, the peso too has also experienced a lot of headwinds. Okay, Philippines, the same thing. Brazilian real, the same thing. And of course, in Nigeria, in spite of the stability in exchange rate, okay, in spite of the positives we've had in Nigeria, the oil price, for example, okay, well, in excess of $70 per barrel, the growth in foreign reserves, the retreating inflation. In spite of all these positives, the negatives are really weighing down. And what are these negatives? The political temperature. The political temperature is very high, okay? Which is why some people, as a rational investor, especially these foreign investors, they are highly investment savvy. And because this is a market that's information sensitive, they want to sit on the fence and watch, how the situation plays out. And that's why I said this is not the first time. In 2014, if you also noticed, the first half of 2014 went well. That was even the time we started having, we had, for the first time in 2008, during the crash, we had a primary listing. Between January and June 2014, that was in April, Seplat Oil Company, listed on the stock exchange. They had this dual listing in London Stock Exchange and Nigeria at 576 naira, at that time. Okay, it was also in 2014 we had the rebasing exercise, you recall. We rebased our economy. So all these factors, played a positive. But towards the end of 2014, oil price slumped. Okay, and then we also started having this political tension, such that again, 2014 the market lost 16%. 2015 the market lost 17%. It was not until 2017 that we now recorded the 42% on the back of improvements in foreign reserves, on the back of the I&E window. So what I'm saying is political tension is there, but it's not only the political tension. There is also the insecurity situation. So we have political tension, we have an insecurity situation, all conspiring to scare away investors. And just as you rightly pointed out, the local investors, the retail investors, okay, even the domestic, including institutional ones, okay, tend to follow the head. These tend to follow the direction of foreign investors. If foreign investors leave, they also. So that's what is playing out.
Professor Waleke, thank you very much. I mean, you've tried to also make a a comparative analysis of what is playing now. The Philippines, for instance, in Turkey, we don't know the problems that Turkey is having with the U.S. at the moment and how that is impacting the rate of exchange of the Turkish lira. But there's a point that you raised, and I would like Dr. Afolabi Olowokere to also speak to this. Because part of the rationale in looking at Nigeria's political economy is to say, when you examine a number of the critical rates, whether it's the exchange rate, which has stabilized over some time now, rate of inflation, which has been declining for the past 16 or 17 consecutive months, you look at our foreign reserves, how come we're having this pressure on the capital market? And when might that pressure move on to the money market?
Okay, thank you. We should also understand that for most of the instruments in the money market, they are fixed. Most of the time, as an investor, if you have something that has a risk, it must have what is called a risk premium over that of the money market. So whenever you have a lot of risk in the market, you can have flight to money market instrument. In other words, people may prefer money market to some other capital market instruments. I mean, that's one of the things that's playing out now. You have governments issuing bonds at, of course, 16% before now, then coming down gradually because rates are coming down gradually. So what you are saying about interest rates, relatively, we still have MPR at 14%. We have our reserve is relatively better than we had it like 1 year ago. Our inflation has declined 17 consecutive times, and people are still expecting that it may even go to 11% this year, even though it can still come up later during the year when you have a lot of election spending and the rest. So for an economy, it's not just what is happening now. More importantly is what is the expectation. So what do you think will happen to GDP, for instance, which is a lagging indicator? What do you think will happen to your reserve? What do you think will happen to inflation? What do you think may happen to your exchange rate? Even for the exchange, you may say, okay, oil prices will relatively stabilize, and that may not really have a negative impact on the exchange rate. But what happens to political risk in the economy? So there may be a lot of factors that are considered by investors before they make whatever they want to do. Another important thing is that what is going to happen to earnings of companies? If we are talking about movement, short-term movement in buying and selling, which has to do with capital gains, you're also interested in what is going to happen to dividend, for instance. In what environment are business playing? If inflation goes up a bit, can they pass on the cost to consumers? If they cannot, then that probably will affect their bottom line in terms of what they make in terms of profit and what they can distribute to investors. So there are quite a number of factors that are considered. Even when the macroeconomic environment may be stabilizing in terms of economics, you're also interested in the politics. You are interested in who takes power. You are interested in where would government spend more or less? What is going to happen to budget? And at what level will government inflate the economy, or in what area? Is it going to be in the productive things that will lower cost of business to investors? And so there are quite a number of factors that are considered before you decide where to really place your money.
Now, you've raised a couple of issues and you've touched on so many factors. Now, if we continue to nosedive, what are the implications for our economy?
Continue to nosedive cannot go forever, right? Because when prices go down, it's also an opportunity for other people to come in. For instance, some were thinking before now that some prices were too high. This is also a very good opportunity for them to buy. In other words, I mean, you remember this demand for money. Demand for money can be for speculative, for transaction and things like that. So there are people that also hold money, waiting for when stock prices will come down. So always, at every point in time, there are people that will pick things up. So a lot of foreign investors might have left, and some of them from different parts of the world will still come around again and still pick them up even at their lower level. And that is one of the reasons why you must have a very liquid market. And a market where you have a lot of participants. And then you have a very robust regulatory environment so that when people leave, other people can come in. And that's one of the reasons why we have always been talking about retail investors and developing that part of the market. Because when things come down a bit, there are people that will be able to buy. So nosediving, we can't just continue to nosedive. There will always be a floor where people will come in and then pick things up.
All right. Professor Waleke, again, I would like you to speak to the continuing bearish trend. I mean, Dr. Afolabi says, listen, this cannot last forever. But what are the implications? You know, how can again, we're talking about the ordinary persons. When you're talking about the cascading effect of what is playing out on the capital market. Usually, occurrences at those, if you like, the rarefied levels of the economy take place, before the ordinary man begins to feel the impact in his or her pocket. So, what is the prognosis in terms of this bearish trend that we have seen on the back of political risk and insecurity?
Yeah, thank you. Before I talk about the short-term implications, let me agree with him that it is temporary. The situation is temporary. Okay, it is a cycle, and foreign investors are leaving. If you look at the NSC domestic and foreign, transactions report, it speaks volumes. That of May, the latest we have is that of June. That of May, is very clear. That of May talked about outflows out of the economy, being in excess of inflows. In fact, we had outflows, recording more than over 100% relative to the previous period. So foreign investors are leaving. But again, that is, I also see that as temporary. I say that because if you look at the valuations, okay, the valuations are good. The valuations are attractive. Okay, one of the things you look at when you say valuations is you pick a particular company, you look at the PE ratio. Okay, for many of them, their PE ratios are low. Look at Seplat. I want to give an example. Seplat with a PE ratio of just 2.99 times. Okay, and this is a company that recorded loss last year. Seplat has just released this first half-year report, okay, that talked about 14 billion naira profit as opposed to loss in last year. So in spite of that, we still see the price is going down. It's not only Seplat. We have seen GTB, the most recent, GTB Zenith. Okay, so Zenith at 23 naira, in the opinion of many, is undervalued. The same with GTB at 39 naira. Okay,
Well,
if you now find, yes, I'm coming to the publication.
I will pause you in the meantime so that we can deal with this aspect of what you gentlemen say, look, is a temporary trend.
Yes.
So the question on the impact, you can
okay,
take
let
up.
me speak to it.
Before you get to the impact,
Yes.
let's explore this. 10 years ago, when the capital market crashed, the initial prognosis was that it was temporary. You recall that? Yeah. I agree that the circumstances that we had 10 years ago aren't exactly the same as we have today. Yes. So, is this really temporary from what we are seeing?
Yes.
As I said, against the backdrop of political risk and insecurity.
Yes, I was already providing the justification. Yes. When I say temporary, the justification I provided, it's revolving around what? The value of a company. 10 years in 2008, when we had the global financial crisis, that was more like a systemic risk. Everything was affected. Companies were affected. Okay, if you look at the company results, as opposed to what we're having now, companies were not doing well. So if companies were not doing well, okay, you should also expect that their share prices, would be down. So that's what happened at that time. A lot of companies were really, their bottom lines were hard hit. And of course, naturally, it fed into their share prices. But that's not the situation now. The situation now is that valuations are good. Okay, if you look at corporate results that have been released, okay, since last year, both for as at 2017 and even the ones that are releasing now, many of them are good. Okay, and I've cited examples. Okomo Oil, for example, Vitafoam, some of them, Stanbic IBTC, and many of them are paying dividends. GTB 30 kobo, interim dividend, Zenith Bank 30 kobo, Stanbic IBTC 50 kobo. Stanbic IBTC is being given a scrip dividend. So valuations are good. And if companies are doing well, again, you should expect that their share prices would be heading north. But if companies are doing well and their share prices are down, it tells you that those share prices are undervalued. And that is when people come to take positions. That is when investors, come to buy. That's why I said it's temporary. Now, on the short-term implications, part of why we have 46 point something Our foreign reserves, external reserves, a little shy of $47 billion. So part of why we have that quantum of reserves is because of, yes, the bulk of it is from what we earn from oil, but we also know that when foreign investors come in, whether by way of foreign portfolio investment, which we'll see in the stock market, or foreign direct investment, it shows up in reserves. So reserves have grown partly because of foreign investors. If you also notice, these reserves dropped recently. From a high of 48, we are seeing 47 now, 46 point something. Okay, partly on account of exit of foreign investors. So when they leave, reserves go down. And the primary reason of having adequate reserves, right now we have more than enough to finance over 14 months of imports. Okay, one of the primary reasons of having reserves is to be able to defend your currency, particularly where you're having fixed. You decide to fix your exchange rate at 305 naira to the dollar. You must have reserves to be able to defend that. Okay, so if reserves keep going down, it's not going to help our exchange rate. Okay, and again, you also know that the moment the exchange rate is affected, and central bank monetary policy too will want to address that, because if exchange rate goes up and feeds into inflation, if there's a pass-through to inflation, inflation goes up, the central bank will also want to react by raising further tightening monetary policy. And if monetary policy is tightened, we also know the implications. Cost of funds go up. Okay, the issue of poor asset quality in banks will also be there, and and so on and so forth. So that is the implication, and that is why even when people say yes, I agree, we shouldn't be much concerned about foreign portfolio investment because that is hot money, but it helps to stabilize the economy. So we need foreign investors to be here, okay, to be able to help our exchange rate, okay, to be able to also help the inflation, because some of these the macroeconomic indicators we have now that are positives, once this thing continues unabated, of course they become affected. And that's why it's important that we try as much as possible to put in countermeasures. We may not be able to do anything about the political situation because that has been but it's important that we put in countermeasures to cushion or to insulate the stock market from all these all
right, Professor Waleke, thanks a lot. We'll come to you to elaborate on the countermeasures that you would like to see. We are going over now to our Lagos network studios, where one of our regular guests is joining us for this conversation. You can see him there on the screen. Is Johnson Chukwu, is CEO of Cowrie Assets Management Limited. Mr. Chukwu, pleasure to have you again on Good Morning Nigeria. Good morning, Nigeria.
Yes, ma'am. Good morning.
And straight away, I hope you've had the benefit of listening to part of what our two guests are saying here in our Abuja studios. And of course, the issue has to do with the trend in the Nigerian capital market. Two critical factors have been identified for all of this. One, political risk, and of course, insecurity, plus occurrences elsewhere around the world, in particular, the US, where you're having perhaps some more saccharine opportunities for investors. But what is your take on what is playing out at the moment in the capital market ahead of the 2019 elections?
Well, I'm happy that your guests have already identified two of the critical factors that are contributing to the downward trend or southward movement in equity prices. I mean, the equity price has now entered the bear territory, given that it had declined between January 19th by 21% as at Friday. Basically, the major factors which were rightly pointed out are the issue of political risk. We have heightened political risk in the country. Most investors are not willing to take a bet on variable income assets, given the outlook of the political environment. The other factor also rightly pointed out is the issue of normalization of monetary policies in the Western countries, the US, Britain, and the European Central Bank. We've seen the US interest rate move up. We also saw last week the British rate move to 2.5%. then you have to look at what's happening in Japan and what's happening in other European countries. The reality is that a lot of foreign portfolio investors coming to this country will ordinarily leverage or arbitrage. That means they will borrow from their local economies at very low rate and come to emerging markets and get higher returns. But at periods when interest rates are going up in those more matured economies, they are naturally safer environments. So clients or investors will move away from more risky economic environments and to better structured environments. We've seen, not just in Nigeria, we've seen most emerging economies equity market go into southward movement. Had seen a lot of contraction. We've seen that in Brazil. We've seen that in South Africa. And you've seen Chinese exchange also on the decline. But that of Nigeria is actually higher because we also have included our own factor, the political risk.
Okay, well, let's examine the political risk, for instance. Yes, the monetary authorities can do what they can with regard to getting, the right mix of factors in order to help stabilize the economy. But on the political side, what would you like to see in terms of attenuating the political risk that is obviously a disincentive, as it were now, to institutional and retail investors?
Well, I think what I would expect to see in the next few days is that the two political parties should play by the rules. One of the reasons why we saw increased concerns by foreign investors, you saw the market drop by about 2.3% on Friday, was the crisis we had in the National Assembly on earlier in the week. And investors would, in the face of such unexpected occurrences, almost take out their bait, and they can hazard a guess on how the political process will end. If we are playing by the rules and the two parties keep to the terms of the Electoral Act and the terms of the Constitution, and nothing untoward happens that will indicate an abuse of political power or a situation where the rules or the Constitution may be overridden by those in authority, then the concerns of investors will, to some extent, moderate. That's very key. Then also the statement by the major actors that are assuring investors, particularly a statement from the presidency and a statement from the opposition party, assuring investors that they're going to play by the rules. If you cast your mind back, in 2014, prior to 2015 the election in 2014, President Jonathan said that his electoral victory is not worth anybody's blood, that he wasn't going to sacrifice anybody's blood to win the election. So that also assured investors that, look, it's not a do-or-die affair, and that ultimately, whatever is the outcome of the election, the parties will accept them in good faith. So for a lot will now depend on the political actors, right from the president to the Senate president to the Speaker of the House of Assembly, House of Representatives, to the party chairman, and other major opinion leaders in the political environment.
Thank you very much, Mr. Chiku. We'll come back to you in the course of our conversation. Let's bring in quickly Dr. Afolabi. Now, he talked about political parties playing by the rule. And before we went to Lagos, Professor Waleki also talked about putting in countermeasures to help. What are some of these measures in your own opinion?
Okay, I think the measures can be macro in nature, and some of them can also be industry-wide. When I say micro, I mean the ones that can be done at the country level, and those are some of the ones that he has alluded to. It has to do with the government of the day trying to make sure that things are done properly, or they are better done, and then giving investors the confidence that they are needed. But in the area where I can talk more, we have to do with sectoral ways of doing things. In other words, coming from a regulator, what do you do to ensure that people have confidence in the market? And if you look at it at the level of Security and Exchange Commission, what we've been trying to do with the market is to make sure that there is investor confidence in the market. There are many ways to do that. You need to make people very literate about the capital market so that it is not seen as if it's gambling and there was something that you put in 1 naira and then sure you must get 5 naira in return, and then I mean, that's very important. That's very key for people to see it as an investment avenue where you can put a lot of money and then you expect some return within a defined scope. It's also very important to see how regulators, or how the regulators behave, especially the capital market operators. How do they behave in the market? He mentioned a very important point the other time that even though in 2008-9, when we had the crash, everybody was saying it was temporary, but it later became something that we compared to today that's still a very high level compared to what we have today. But one of the factors we had then, we had some market manipulations. We had margin loans that were not properly regulated, properly structured. But today, we have something far better than that. I mean, there are things that you cannot just do the way you were doing them. You cannot easily manipulate the market. So the regulator tries as much as possible to survey the market, to do serious surveillance, and ensure that things are properly done. And one major area is to look at this issue of risk-based supervision, to ensure that when you look at capital market operators' behavior, when you look at their books, you apply what is called risk-based, so that they are able to play by the rule, and their capital structure are able to commensurate with what they are really doing in the market. So there are quite a number of things that the regulators are doing in conjunction with the market operators to ensure that there is confidence in the market, to ensure that people play by the rule. Even though you may not be able to change the behavior of the politicians yourself, you may not be able to change the macro structure, but in terms of the sector that you regulate, you ensure that things are properly done and they are done well.
All right, Dr. Lowokere, thanks. Professor Waleke, I don't know whether you want to get into the countermeasures that you talked about earlier. Just speak to that, and then we'll come back again, to the nexus between political management and management of the economy.
Yeah, thank you very much. Talking about countermeasures. Countermeasures. When I mentioned countermeasures, I was referring to some of the things we could put in place to sort of ameliorate the impact. But before then, if you also look at politics, the role of politics and politicians, it's also important that just as Johnson said, they are made to play by the rules. The one that quickly comes to my mind is this issue of INEC budget. INEC budget of over 200 and something billion is yet to be approved. That kind of thing sends very wrong signals to the investing public, because it creates uncertainty as to whether or not the elections would even hold. That is, if the INEC doesn't get the funds that it requires to conduct a free, fair and credible election. The other two has to do with even the budget that has been passed. The budget has been assented to, the appropriation bill. Okay, as we speak, the capital component of the appropriation bill, is yet to, be implemented, is yet to be released. Capital funds are yet to be released, and the year is fast coming to an end. So these are some of the issues that we need to tackle and expedite action on, so as not to compound the the present situation. So the National Assembly needs to, and I'm happy they're meeting next week to get the INEC budget approved. Yes, approved. And then the budget implementation too, particularly the capital component should be given a very serious attention. Now, having said that, if you cannot change something, okay, what we say in finance is that you provide for it. So if you can, systemic risks are provided for. He said you can't change the behavior of politicians. So we now try to accommodate that by trying to also look at some of the things we can put in place to try to spur the market. Now, I say this because if you look at our budget, there is nothing specific there addressing challenges we have in the capital market. One of the assignments I gave my PhD students recently, PhD finance students, is to pick the 2018 budget of emerging economies, some emerging economies, and analyze their implications on their capital market. One of the things that we that came out of that assignment is that countries like Pakistan, India, okay, even Malaysia, have specific policies that are targeting, capital market growth. Not surprisingly, too, Malaysia and India, okay, are not experiencing this, bearish trend in their stock markets as we are experiencing. Pakistan has introduced tax incentives, for companies in Pakistan, such that the corporate income tax rate in Pakistan is 30%. So Pakistan has an incentive of reducing the company's income tax over a 5-year period by 1% every year. India too has approved a privatization of 14 what they call 14 central public sector enterprises. Okay, all the privatization that will be done in India, the 14 companies are going to be done through the stock exchange. Okay, including the privatization of Air India, their flagship national carrier. They are doing that through the stock exchange. If you come back home here, in our budget, we are talking about, government says it intends to raise about 305 billion naira from privatization proceeds, okay? But the process counts. The process will tell you whether it's meant to be an inclusive one or it's also meant to serve a specific purpose. If you privatize and sell to very few hands, then it is not inclusive. But if you privatize through the stock market, through the stock exchange, for example, it gives room for a lot more people to key in. So it's important how we do these things. The same thing with the loans. The government says, they want to take. When you take loan, okay, when you borrow and you put in capital projects, what type of capital projects are you putting them in? Okay, part of why we're having this challenge with borrowing is that even when we are putting in capital projects, we are not putting them in self-liquidating capital projects. So the recommendation I have is that the government should come up with fiscal incentives, good fiscal policies that will spur the capital market. That can come by way of, having a discriminatory, tax policy for companies that are listed on the stock market. The central bank did something recently, which will also help the capital market. The central bank talked about having differentiated cash reserve ratio, for banks that will lend to the risk sector. That will be positive for the capital market. These are the sorts of things we need to do, now to really spur the market.
All right, Professor Uche Waleke, thank you very much. We're taking a short break now. When we return, we'll take your comments that have come in by tweets and then, of course, get back to our guests.
Ladies and gentlemen, please welcome the daring and invincible Louis the Mosquito. Responsible for 200 malaria cases all on its own. Is there anything that can kill Louis? Morphine! Presenting Mortise Power Guard. Its powerful formula kills malaria mosquitoes fast. So, get Mortise Power Guard.
Your perfect family is under threat by germs. Infectious diseases are now the world's biggest killer of adults and children. Every day, 16,000 children under the ages of 5 and thousands of adults die from infectious diseases. These infectious diseases are caused by germs. They are everywhere. An average human being comes in contact with over 1 million germs daily in unclean water, dirty surfaces, in the toilets, on cuts and wounds, on your clothes. Germs can cause deadly diseases like typhoid, diarrhea, flu, and cough. To protect your family from germs, use the power of Dettol's One Capful for surface cleaning in your bathing water, in your laundry water, for first aid to protect your family from up to 100 illness-causing germs. Be Dettol Sure, endorsed by the Nigerian Medical Association.
Use Dettol Skin Jelly, which protects against germs for a healthy, smooth skin every day.
If you hear a bomb explosion or gunshots of an active shooter, that might be a terror attack. At such times, always remember 3 action words: run, hide, report. Don't try to run towards the terror scene to save the situation, because there might be a second bomb blast or another attack. Run far away and take cover. Make sure you are safe first. Yes, it is in our nature to sympathize over the hurt, but remember, only trained personnel can help in such situations. When in a secured environment, promptly call relevant authorities and help will come. For anonymous reporting, call 09630-3250-5 or 0813-2222-106. If you see something, say something. Nigeria, unite against terrorism. This message is brought to you by the Federal Ministry of Information and Culture.
Why don't you people sell imported materials here? As beautiful as the shop is.
Buying foreign goods does not help our economy. Neither does it boost local production. And the good thing is Nigerian-made products are high quality. Really? And to make Nigeria great again. That is why I only sell made in Nigeria products. Because change begins with me.
I'm convinced. Change begins with me too, huh? Change begins with me.
This message is brought to you by the National Orientation Agency in conjunction with the Federal Ministry of Information and Culture.
All right, you're welcome back, and still Good Morning Nigeria, reaching you on the network service of the Nigerian Television Authority. Now, let's take some of the reactions that have come in by way of tweets. You can see our handle there at the bottom left-hand corner on the screen at NTA GMN. Mike Ayanko has this tweet. No economy can progress under mutual distrust, subterfuge, political manipulations, and total disrespect to constitutional authority and extant laws of the land. As the 2019 general elections are fast approaching, we must play by the rules and shun violence in order to sustain investors' confidence.
And this one is coming from Olabode Benga. It says, if we are going to get our economy insulated from political shocks, we should place merit, ability to deliver, and know-how above political requirements.
And Dele Jack Solomon has this tweet. Now, governments everywhere in the world are generally under pressure to provide an enabling environment for businesses to thrive, to provide employment and generate revenue to government. Now, diversifying the economy away from oil is a sure way to political stability in the country. Omar
Bolahon tweets, one of the potent ways to insulate the economy against locking political shocks. Lukewarm political shocks is to ensure the continuous blockage of leakages, which hitherto provide financial wherewithal to the political class to run the thing. Also, we must ensure the fight against corruption is holistic.
And Francis Obe tweets, now we need to borrow a leaf from America and the UK that we copied from by creating institutions to monitor and evaluate the entire administration and ensure disengagement of politicians that are not performing. Now, those are the tweets that we're taking in the meantime. Let's return to our guest in Lagos, Mr. Johnson Chukwu. Mr. Johnson Chukwu, again, still dealing with the underlying causative factors of what we are seeing in the capital market. I mean, some persons will say that politicians are, as it were, concerned about grabbing power, and oftentimes they get blindsided, to the economic consequences of their conduct. How can the potential or actual consequences of their conduct on the economy be brought closer to them so that they then might begin to think of ways of responding? For instance, look at the National Assembly. If the National Assembly reconvenes tomorrow as they're scheduled to, that's the House of Reps, for instance, and then the matters on their plate still don't get to be addressed, then of course you're going to have issues. Plus, you roll on into the primaries, you roll on into the eve of the 2019 elections. What do we have on our hands?
I think the key thing is to hold politicians accountable for their actions. We should begin to measure the performance of each politician that has an elected, that won an elected position, and determine whether the person actually met our expectations. It will come about when we have more of civil awareness, more of voter awareness, and then people begin to discuss issues. And what we need to do, if you take, for instance, in the U.S., in 1992, when Bill Clinton won the election, he came into the election with 3 slogans, one of which was, the economy is stupid. which was eventually modified to "Is the economy stupid?" The reality of the matter, what he did was to assess the performance of George Bush Sr. based on the economic performance. At that point, the economy had gone into a recession. And that was the basis on which Americans voted for Bill Clinton. In Nigeria, if you cast my mind back to 2015, when Nigerians elected the current president, there were basic issues that were burning issues at that time. It was the issue of corruption, issue of the crisis in the Northeast. And Nigerians felt that the president would deliver on those things. So we must, as a people, begin to measure the performance of our elected officials, both at the federal and state levels. You did mention the issue of the National Assembly. Have we measured them by the number of bills and laws they've passed into law? Have we measured the contribution of each of the National Assembly members on debate on whether they have sponsored any bill? Then the electorate should be able to decide, are these people delivering on the mandate we've given them? It's only when we hold them accountable that they will have to begin to consider our well-being, our welfare, the growth of the economy, and the expansion of jobs in their actions.
Thank you, Mr.
Yeah, well, Joy, I'm just wondering. I mean, still on the management of the economy with regard to the shocks arising from the political sphere. When you take a look at the macroeconomic numbers, they are quite favorable as we have seen them. But is there any risk of a slippage, into what we witnessed in 2016, 2017?
Well, there could be a slowdown, but I do not think we will slip into a recession. One of the factors that are favorable on the side of Nigeria is the crude price. We've seen a crude price that has remained above $70. Granted, production has actually declined marginally. We're dealing with the production of about 1.6 million barrels a day now against 1.811 million barrels in January. So while we've seen marginal decline in production, crude price is compensating for the decline in production. For that reason, our foreign exchange earning will remain buoyant. And as long as we can earn enough to meet our import bills, including importation of raw materials and equipment, I do not imagine the economy will go into recession. But we'll see a slowdown, a growth that is below the growth we recorded in the first quarter of this year. The first quarter we recorded 1.95% GDP growth rate. I think as more attention is taken away from economic management to political activities and nobody is turning the economy, you could see a slowdown in the GDP growth rate, but I do not think it will slip into a recession because some of those factors that drove us into recession are not currently applicable.
All right, thank you very much, Mr. Chukwu. I want to go to Dr. Afolabi now. Mr. Chukwu raised a very vital point while talking, and that is the one that borders on the electorate and how they can actually change this current narrative about the behavior of politicians. I would like you to speak to that aspect.
Okay, thanks. It's important we have informed electorates. I mean, some have said that the leader will also come out of the electorate. If the electorate themselves are not well informed, it's also possible that people that will be the leader after some time will also be doing what are not expected by the electorate. So it's important, as he said, for the electorate to hold the elected to what they promise that they will do. If you promise you're going to do this, how well are you doing it? If a budget comes up to say we are spending 20 or 30% or 40% of capital project, the first thing to ask is, okay, that's fine. How good is that? That's the second thing. Third thing is, what are even the components of the capital expenditure that are called capital? And then the third thing or fourth thing is, how well are we doing this? And how timely are we doing this? So it's important for electorate to do that. And many have argued that for electorate sometimes, because there are many, I mean, it's always a game of number, but when the numbers are not well organized, it's possible for the few to determine what happens to a lot. So most of the time, it's now for the electorate to be able to group themselves together, to be able to form a common front. And some of the organizations like NGOs and the CSOs can be very useful in that area, to be able to organize electorate and then put people to their worst, to say, you promised us this, are you doing it? What are the problems? What are even the strategies? So it's not enough for someone to say, I'm going to build a bridge, but how? And what do you think has not enabled the former person who promised us to do it? What did he not make? Why did he not make it? So what is it that you are bringing to board that will make sure that you are able to do what you promised us? So it's important for electorate to be organized. Education, very important. Maybe the platform of our universities or higher education level can be used to educate our electorate in order to know how do you ask for your rights. How do you ensure that? Because if you as an electorate don't know, by the time you even become an office holder yourself, how do you do what you don't know? So I think it's very important for electorate to be able to hold people accountable to what they promise.
All right, I would like to bring in Professor Uwaleke into that conversation because I'm interested in that angle of the electorate holding our politicians accountable. Is it right for us to say that they are not enlightened at this stage of our democracy?
I think the National Orientation Agency has a lot of work to do. I also think the INEC should learn from the pilot elections, that what I call pilot elections are conducting now, the Ekiti. And the most recent, the Kogi in particular, Katsina and Bauchi, INEC should learn, from them. Something worrisome is beginning to emerge. You see, if a free, fair, and credible election involves a whole lot, you try to tighten the noose, somewhere. You migrate from manual to electronic form. The politicians are also devising other means, to circumvent, to also continue to perpetrate, such acts. I'm talking specifically about the one that's emerging now, which is I think they have you see, see and buy, see and vote, see and buy. So that one is particularly disturbing. Okay, so that is what, of course, INEC could say is not. What can they do about it? But it's for our security agencies to ensure that that is stopped before it assumes, a very disturbing dimension. People get to the polling units, they are offered money, okay, before they cast their votes. Which is why I won't be surprised if politicians are now trying to amass, a lot of money, trying to even selling their stocks in the stock market to be able to hold cash, to be able to influence, election outcomes. So our security agencies need to be on top of the situation. The same with also INEC, officials. Once they notice something, they shouldn't allow it to fester. They should try to nip it in the bud before it gets out of hand as we approach the general elections in February 2019. But I also think that if we don't do something, doing nothing is not an option. If you don't do something to see if you can, as I said, arrest this slide, it could, some of these macro economic positives can also reverse. One of them is inflation. Part of why the MPC at their last meeting decided to hold the rates. As a matter of fact, 3 of them were even voting that the MPR should be increased from 14%. Part of why majority said they should hold the rate as opposed to reducing the rate, has to do with the concerns around inflationary pressure, that pre-election spending, could push up inflation, and to stay to stay vigilant. It's better for them to hold it. So these things could reverse. Inflation could go up again, and that will also have a negative impact on the economy. I also want to speak quickly to this issue of investor education, enlightenment, that Afolabi has been harping on. It is very important, and I'm aware the regulators themselves, both the self-regulatory stock exchange, all the exchanges, the 5 of them now, including the Apex regulator, have been involved in a lot of enlightenment efforts. But this is the time to, to ramp it up. This is the time to, increase it. It is important that we also use the platform, just as he mentioned, the platform of higher institutions, the platform of even secondary school, to bring this awareness, to the front burner. In my university, for example, we are introducing the first in Nigeria, a program on capital market, a BSc program on capital market in collaboration with the Chartered Institute of Stockbrokers. The Senate has approved it, and we're inviting the NUC for resource verification. So if other universities could also borrow a leaf, the awareness, will lead to an increase in the retail investor base. Today we talk about 5 million, and by the time you remove the multiple ones, you end up with something lower. And this is a country of 198 million. The other day, the acting DG SEC was talking about migration to the e-dividend platform, numbering about 2.5 million. So if you look at those numbers, they pale into insignificance when you compare us with our peers in terms of retail investor base. Why we need to do that is if foreign investors are exiting, we should have a critical mass of domestic investors, to make sure the effect is not highly monumental.
Okay, Professor Waleke, thank you very much. I would like, to raise again the point that was articulated by Johnson Chukwu. And my question is going to Dr. Afolabi. I mean, Chukwu says, correctly so, rightly so rather, that we are seeing a lot of political activities, but there's little focus on economic issues. And the kind of political activities that we've been seeing lately with defection and the hot air around defection, and again, what Waleke describes as a pilot elections, that's to say the one-off as in Ekiti, and we're going to have in Osun, and the by-election that we have seen. There's been a disturbing trend that has emerged. And that trend, of course, has to do with see and buy and increased levels of violence. If you combine all of this as a cocktail, what would that mean for the economy going forward? Because we're trying to look ahead. Once we enter, as Nigerians know, once we enter the ember months, things go on a fast pace. And before you know it, it's December, and then we are in February, and then all the indices now begin to go haywire. What is required in terms of refocusing attention from, shall we say, the apparently unmanageable political activities at the moment in terms of these political shenanigans, and then focusing on saying, hey, listen, this is the impact this is having on the economy, and we all just might be the poorer for it if not properly managed.
Thanks for that. Maybe one thing I would like to start by saying, it's not that economic issues are not being discussed. Most of the time when you have politics and economies, politics tends to be louder. Even before now, economic issues have always been there. Let's take one, for instance. There will be the implementation of the budget, even though that can be political also. There will be the Monetary Policy Committee of the Central Bank. Whether there's politics, whether it's an election or not, is always there. I mean, as I said, the last time they spoke about how do you move money from CRR and make the money available to companies at single digits through the commercial papers. That's a good economic issue.
No, I'm sorry, let me interject. Yeah. When I say that economy is not being discussed, just as Chukwu himself pointed out, it is to say, listen, what are the voices with regard to options? Other than saying, okay, MPC meets and says that we're retaining it at 14%. Which were the political voices you heard saying, hey, CBN, the Monetary Policy Committee, why are you doing this? Why not this? Or why not that? What are the policy options?
Yeah, I'll still come to that. I'll still come to that. But I just want to raise the foundation that economic issues will always be there. They've always been there. But whenever there's political issues, sometimes they tend to be louder. And they can be louder because political actors say less about economics and they mention more about people that will vote for them. And also they can be louder because press will see that one to be more sensational than economic issue. But having said that, it's important to say that political parties and politicians also need to be held accountable on the basis of what are the economic programs. What do you think is not done right? Instead of I'm moving from one party to another, is it based on a political issue or to be elected, or based on a strong economic issue? Is it because I'm saying if I become the president or the governor, I'm going to make sure that interest rate is not more than 10% or 8% rather than the way it is? So it's important for us to look at the economic issue, but both economic issue and political issue are always coming together. It's very difficult to separate them. But when elections are coming, there are quite a number of principles in economics that try to look at what do politicians think about when they're about to do election. Everybody is more interested in how do I canvass people? How do I ensure that I'm the leader of my party? How do I ensure that I'm being voted for and then hold the economic power? But how do I talk to people so that they can vote for me is more important to politicians. I'll give you an example. Some will tell you that it's possible that a politician that is about to lose an election will employ more people. I mean, there are quite a number of issues like that. Because if you know you are going to lose, then the problem for the person that is coming after you is an economic issue, but it's been politicized a lot. I can increase salary, I can do a lot of things depending on how I want the direction of election to be favorable or unfavorable to the other person. But it's important for people to ask questions also. To say, why are you doing this? You are in this party, but you are moving to this party. What is in it for us, apart from you being elected? So those issues need to be discussed. And in the kind of economy that we have, which is usually called a fiscally dominant economy, when you have oil as a major source of income and that money goes straight to the federation account and is being shared politically, you tend to have politics or the fiscal authority dominating, especially the monetary authority in terms of the economic issue. So most of the time, what they do then is that to start saying, how do we then mop up the expenses or expenditure that has been incurred by the political authority. So it's important for us to bring all these issues together, to ask questions, to ensure that people that are knowledgeable in some of these issues are done. I mean, just as I said the other time, if somebody is saying, I'm going to do this, how? How are you going to finance it? What is going to be the impact of that on other things? What are you trading off for this? And why are you doing this? So those are very important questions that we need to ask as people.
All right, thank you very much. Let's go back to, we have some tweets, by the way. Maybe we'll just take those tweets before we go over to Johnson Chukwu to get his final thoughts, and then we'll sign off our guest. Isaac Estefanos tweet said, so long as the economy is controlled by economic theorists rather than practical economists, our economy will be difficult to manage. How? It doesn't explain.
Peaceful and conducive political environment are needed for economic development. I therefore urge the political dramatic persona to play to the rule of politics. No society progresses and survives economically in the ambience of political shocks and upheavals, and that is coming from Mutana Farouk.
That's right. This one is from Sani Michael Amakoji. So the task of managing the political economy is one for all governments, NGOs, media, and individuals, as they are required to play a part. Specifically, government must de-emphasize the ongoing money politics in Nigeria, as the National Orientation Agency is expected to embark on aggressive political education via the media.
And Festus Akimboyewa tweets, it's the job of government to act as risk managers and protect us from unstable economy. What we have now is an economy that works for a few and not many. We can insulate our economy from political shocks and upheavals by building an all-inclusive economy.
All right, thank you very much. Johnson Chukwu from our Lagos Network Studios. One point in terms of the economy that we haven't thrown into the mix, Waleke has touched on it briefly, same with Dr. Afolabi here, and you also in general terms. We say, listen, the implementation of the capital segment of the 2018 Appropriation Act is a matter that is ongoing. We don't know when it might get a push. And then we are also, there were projections earlier in the year with regard to a new national minimum wage. This is August already. We don't know what might play out. If you were forecasting, what would you say, with regard again to the fact that perhaps on the basis of see and buy, which is becoming an audacious thing in our politics, politicians might wish to amass a greater war chest to fight the 2019 elections. What do you foresee?
Well, I think we have to recognize that when politicians give you money so they can vote for them, they are making an investment, a financial investment, and they're going to recoup it. So if we do not create a level of awareness that people can either reject those monies or take those monies and vote against those who have given them those monies solely for the fact that the people are trying to induce them, then we're going to end up with situations where the government's ability to execute its primary responsibility will be diminished, because those who get elected are going in there to replenish their expenses or whatever their costs they've incurred, and then they will have little space for the public good. So the reality of the matter is that as we create more of a fiscalization of our electoral process, then we're creating governments that will be less and less effective in intervening in improving the welfare and well-being of our citizens.
All right, Mr. Johnson Chukwu, Managing Director, Cowrie Assets Management Limited, would like to appreciate you, as always, for your insights. You joined us from our Lagos Network Studios.
The pleasure is mine.
All right, and here with us in the Abuja Studios, we'd like to thank Professor Uche Waleke, Head of Banking and Finance, Nasarawa State University, KEFI. Professor Waleke, always a delight having you on Good Morning Nigeria.
Thank you very much.
And our appreciation, too, to Dr. Afolabi Olowokere, Head of Research, Securities and Exchange Commission, right here in the Abuja head office of SEC. Thanks a lot for being around on Good Morning Nigeria.
Thank you.
Okay, so that does it for our conversation. We tried to establish a link with our correspondent who is in Bamako, Mali, to give us an update on the runoff presidential election in that country. But the links have been problematic. But we do hope that we'll establish contact with him, and if we get him tomorrow on Good Morning Nigeria, we'll still have him on. Otherwise, you'll get to hear his reports and watch his clips on other programs on the Nigerian Television Authority. Let's go over now quickly to our segments and hear his sports.
If all the world tours... Nigeria's top-ranked table tennis star Aruna Quadri has won the men's singles title at the 2018 ITTF Challenge Semester Nigeria Open at the Molade Okoya Hall of the Tessin Balogun Stadium in Lagos. Aruna, who is ranked 18th in the world, defeated Antonio Achard from France 4-2, 13-11, 3-11, 11-8, 7-11, 5-11, and 7-11 in the finals. That's another beautiful forehand there. It becomes the first Nigeria to win this title. At the FIFA Under-20 Women's World Cup France 2018, 4 places in the next round are up for grabs, and only one has been claimed so far, with Germany the only team to have qualified for the quarter-finals ahead of the last-day matches in Group C and D, and only 18 no longer able to progress. The battle for the last 3 spots in the last 8 is wide open. Spain are in the strongest position in Group C with 6 points to their name. A draw against USA will be enough for them to move on to the next round. The same is true for Nigeria in Group D. While the African superior goal difference means they only have to avoid defeat to China to start planning for the quarter-finals. Their opponents will definitely want to have a say in the matter. Meanwhile, Super Falconets head coach Chris Danjuma said his girls are prepared to face the exceptional task of beating China in their final group